Hi guys, so I'm just about to set up my regular investing with Hargreaves Lansdown, as I do hold my stocks and shares ISA with them. So I thought, why not do a really quick video showing you guys exactly step-by-step process of how to set it up yourself and what are the advantage of regular investing, especially when it comes to the prices or the cost, and finally where I'm planning to put most of my ISA money or allowance in for 2020. So without further ado, let's get started. The way it works is that on the 7th of every month, Hargreaves Lansdown will take a certain amount of money that you preset. So for me, I have preset £1,300 per month to be taken on the 7th. And then on the 10th of each month, that money will get invested where I want. If the 10th falls on a weekend, then it gets invested on the next working day. We cannot, however, change this date. It's the same for everyone. And you can set this regular investing with as little as £25 a month. And this is not a sponsored video and I have no business ties with Hargreaves Lansdown at all. So the positives about investing your money this way, and the main reason behind why I do it, is because of cost and effort. Although I invest some of my money in actively managed fund, most of my investments are and will continue to go to passive investment. So the choice between investing in passive can be between an index fund or an ETF. And I have calculated that if I hold most of these passive investments in the form of an ETF rather than an index fund, over the long term, it will be significantly cheaper for me. And that is because of the way HL charges money for investing with them. If you hold your money in any fund structure with HL, whether it's an active fund or a passive index fund, Hargreaves Lansdown will charge you 0.45% on the value of that fund on the first 250k. So if your total fund value is 250k, HL will take £1,125 from your account every year. And that's a lot of money. But if you hold that money in stocks or an ETF, then the total cost comes down to a maximum of £45 per year. So you must be thinking, what's the catch? Well, nothing big really, because ultimately the underlying fund fee or the OCF, ongoing charges that you pay for holding your money in a passive fund, whether it's an index fund or an ETF, there isn't a huge amount of difference. Take for example S&P 500. Within Hargreaves Lansdown, when I search under funds, I see that UBS does an index fund that tracks S&P 500 and it will cost you 0.09% per year. Similarly, HSBC also does a tracker on S&P 500 but in an ETF format, and they also charge you 0.09% per year. Now, if you held £250,000 in these investments, then per year you'd have to pay £1,125, which is the holding fee for HL if you held the money in the fund, plus £225, which is the ongoing charge, so 0.09%, which equals to £1,350 for investing in the index fund. But if you held that investment in the ETF, you would only have to pay £225 plus the £45, totaling you £270. So you are saving a lot of money in fees per year that you would pay to HL. But the main drawback with holding most of your money or investing in an ETF is that it trades just like a stock, so you do incur a lot of trading fees if you are excessively buying and selling out of this ETF. For example, HL will charge you a hefty £11.95 for each trade that you make on an ETF or a stock, while when it comes to funds, the cost of trade is zero. But here's the great news with investing in an ETF through an automated fashion. When you actually invest in this ETF and you invest them automatically using the monthly regular investing format that is set up by HL, you only pay £1.50 per trade. This is why, even though I still invest in funds, so a passive fund or an active fund, when it comes to regular investing, I make sure that most of this regular investing goes into funds that I like in an ETF format. Let me take you through an example of where I am planning to invest most of my money this year. So starting from the month of January, I want my money to go to 2 ETF. I don't do more than 2 ETF generally because the £1.50 applies to per trade. At the moment, I have £1,300 set as my direct debit. It was set to make sure that I hit my 20,000K yearly ISA allowance target for this financial year. So for January, I will also do the same. One thing I absolutely dislike about HL is their interface. If you want to pick where you want your money to go, you have to go down this horrendous list. This means there is a big room for errors too. So make sure you first research where you want to put your money, get the name right, because a lot of different ETF, they all sound the same, but they are all quite different. So make sure you know where you want to invest your money and then pick that from the list. My first investment will go to S&P 500 Financial Sector ETF. I've invested in this ETF during summer of 2021. And I plan to continue to invest in it throughout 2020. It did well for me so far during the rising interest rate environment, so I'll add £600 here. My second investment will go to S&P 500, the overall ETF. Truth be told, given where we are currently in the business cycle, outlook for market return over this year is not expected to be great. That's because we've had such a strange and short-lived business cycle that we're almost reaching the peak. COVID recession was sharp, but it did not last long. Its initial recovery was also very sharp as well. This means we're currently here, which is called the late cycle. Where a complete business cycle of boom and bust takes about 5 to 10 years, this cycle has only lasted for around 2 years. And at this late cycle, what generally happens is that economic activity like sales reaches a peak, implying that growth remains positive but starts to slow. You get a tight labor market, which impacts company profitability. Inflation increases, which ultimately leads to higher interest rates. And if you look around, especially in the US, we are nearly there. If you go back and study the history, you'll typically notice that a late cycle means a low stock market return. Not negative, but low or moderate. And the nature of a late cycle means that certain companies, especially big companies who are strong enough to withstand the rising inflation or slowing of sales, are expected to do marginally better than rest of the companies. And S&P 500, although it's a very diverse index representing the whole of the United States, it does hold the top 500 largest company in the States, and a lot of them actually have a very strong balance sheet to withstand this higher inflation and slowing down of sales. So S&P 500 still feels like a relatively good place to invest my money for this year. So guys, there you have it. These two are my regular investing with Hargreaves Lansdown for most of this year. I hope you found this video useful. That's all for today, and until next time, look after yourself and your money.